Mohit Gang is joining us this morning to help us understand what the strategy of retail investors should be when it comes to participating in the IPO frenzy. Mohit, thank you so much for your time. But before I let you chime in, I want to just initiate this, the details of what these two IPOs are, especially the one that has become controversial. First up, let's begin with Lenskart. Remember, the offer period started on October 31st and is open until tomorrow, November 4th, with as much as 2,150 crore rupees worth of shares as offer for sale, with a lot size of 37 rupees per bid and the price band of 382 to 402 rupees. Remember, the allotment date is November 6th, with the final listing of the shares on November 10th. Now, in a completely different orbit is also the IPO of Studds, which did open its IPO bids on October 30th until today, November 3rd, with an OFS of more than 455 crore rupees and lot size of 25 shares per bid. A price band much higher than Lenskart, but valuation much lower at 557 to 585 rupees per share. Remember, tomorrow, November 4th, is the allotment date, with listing end of this week on November 7th. But amid this hype of IPO frenzy, Lenskart and its valuations have raised a big question mark, with experts cautioning that the 70,000 crore rupee valuation is an extremely high one, with the market cap which has seen a jump of 8 times from just 8,500 crore rupees in just 3 months. Now remember, founder and Shark Tank judge Piyush Bansal had bought back equity, part of his equity, at 52 rupees a share just months ahead of the IPO. Also, the profitability just 1 year before the IPO, is that really worth believing? And of course, this high valuation also comes with a high price to earning of as much as 235 times. Mohit Gang, I want to really focus on the Lenskart IPO, which is open until tomorrow. Now, there has been a lot of question marks on the valuation for retail investors. How much should they read into this valuation debate?
Hi Kartik, good morning. Always a pleasure to be on your show. How I wish that I was not drawn into this debate of.
I'm so sorry to do this to you on a Monday morning.
No, absolutely fine. And look, I think Kartik, you can view Lenskart as per the lens you want to wear, right? And as they say, beauty lies in the eyes of beholder. So is the case with this particular IPO, and it completely depends on what lens are you viewing it. And let's look at the positive lens first, where you have seen institutional participation, you have seen big marquee foreign names and some domestic mutual fund names queuing up at this kind of valuation, right? So, and their thesis is pretty simple. It's a large TAM, hugely addressable market in a country like India, where the demographics is scorchingly speaking for itself, and an eyewear thing which perhaps every Indian will require at a particular age, right? So the TAM is extremely large. If you can, with some kind of technology, right now I'm not debating whether the technology is like path breaking or something which will turn the tide in favor of Lenskart or not,
Yeah.
but if you can address that market through digital outreach at a very conducive price point, then perhaps the world is for yours to take,
All
right?
right.
And India today has almost like 80,000 retail eyewear outlets.
Yeah.
Can a Lenskart have around 10,000 outlets in next 3 to 5 years? Or 5,000 outlets for that matter? Perhaps they can, right?
Okay.
So it all depends on the audacity of their ambition.
Right.
Right. So that's the thesis. And if you go by that thesis, I think foreign players, FII investors, they particularly like that kind of a thesis where it's a tech play, large market, and a unilateral position, a
Right.
kind of a dominance, right?
Right. But
The
what's
second
the
thesis,
flip side?
yeah, I'm coming to that. The second thesis, which is what most domestic investors are highlighting, is the crazy valuation. Look, honestly, to sustain a 235 times run rate on your earnings, and earnings which is also a one-time earning, is an extremely improbable task. I don't think so. In my memory, I don't recall of any company which could have sustained that kind of a valuation for a pretty long while. Maybe a quarter or two, maybe a year or two. When you are a company which is funded by private investments, it's a different case. But when you're a company which comes into public glare and are funded by public money, then
Yeah.
it's a very different case altogether. So my sense is the valuation is absolutely absurd. A 70,000 crore kind of a valuation for this kind of a business doesn't justify itself as of now. If they can really turn sustainably profitable for next 2 years
Yeah.
odd, then perhaps one might have a look at this company. But my sense is right now, honestly, I think given the conditions, it's an avoid from a sheer valuation perspective and the addressable business perspective. Plus the second thesis, Karthik, I don't think so it's a very large tech play.
Right.
Right, so Tatas have been into this business, and there is very little which tech can do,
Right.
rather
So
than giving a
scalability
profit.
will be a challenge.
Absolutely, absolutely, right. So, and India will always remain a price-conscious market, a fragmented market where
Yeah.
unorganized players will kind of chip off your market share every nook and corner. So, I
Right.
think it's a tough ask. So, my sense is one should just wait and watch for this one to
Wait
play
and
out.
watch is the word coming in. Mohit Gang, always a pleasure having you here on News 9.